Why don't you tell the people at home what it is that you do for Viza?
More recently, getting into the accounting and finance aspect of real estate, between all the properties, bill paying, mortgage processing, just all the general accounting reports,
So before that, you're doing all the repairs and maintenance
other
and accounting.
yeah, and accounting, and the same thing I'm doing now, but just with a little bit more bills.
Yeah, it's funny because now we have two people working on the repair side for the most part, exclusively between Christy and Rodrigo.
Yes.
So you got two people that took over part of the job that you were previously doing. But it's nice you could finally focus now all on the numbers. And that's where you really excel and where you feel like you make the most impact, right?
Yeah, well, it's definitely easier when you're just dialed in and focused on one aspect, and you get really good at doing one thing, and when your energy and focus isn't shifting so much throughout the day. That's the biggest thing.
Yeah.
So previously it would be like I would be paying bills, at any given time, and then the next minute I would get a call from a contractor and have to completely shift focus and call tenants and schedule things and call different vendors and try to get things fixed. And then now it's nice to just completely focus on, any accounting tasks that I'm doing.
Yeah.
And in that way, things don't slip through the cracks as easily.
Yeah. And with you doing all of it, there's there's nobody that enters in something incorrectly and then throws off financials for, the rest of the month, or you have to go back and fix things. I think there's a lot of property management companies out there who they're property manager for specific buildings. They assign like one person to handle everything for a property or a group of properties.
Yeah.
And then that person has to do all those various tasks for the building. But I think the way we operate is just much better, having everybody have, in their own role, doing the same thing over and over again, because they could get better at what they're doing and find ways to optimize what they're doing. Whereas if you're wearing so many hats, you're never really going to have the time to optimize what you're trying to do,
Yeah.
So I think for us being a small company, it's really good that everybody has very defined roles and responsibilities, because we're not stepping on any toes.
Yeah.
And I think, things just get done very uniformly. And it's very easy to assign out or to get back to owners accordingly, because you could just forward it to the person who's responsible, right? But
yeah, I also think it's important to have everybody in their defined roles. So if I'm the one paying bills, but somebody else is uploading them and tagging them to the incorrect account, or, not including the fees that are, processed from whatever bill you're paying, it like throws everything off for like between the bank feed, and then something doesn't pop up on the income and expense report because it doesn't match to the transaction. Yeah. It doesn't match to the transaction on the bank feed. So it's like you have to just go back, delete the bill, change the price, redo it, and then, match it to the bank feed. So it's like everything just being off by a couple cents or pennies, or excluding the processing fee, just like throws like 3 to 4 different things off.
Yeah.
But when you have two people kind of doing it, but with different processes and ways to go about it, gets tricky.
And it's a lot, especially now, because all the accounting is very different by what you're doing it for, what entity you're doing it for. Because you have Viza Property Management on a like holistic business level that you're doing the accounting for. And then each property is owned by its own entity, which needs its own accounting. And all of that needs to be shared on a monthly basis also with any investors which are invested in the deal, right? They have to have an understanding of what the net cash flow is and how that relates to the distributions that they're receiving. And then on top of it, where I think accounting is probably even most important, with all the HOA entities.
Yeah.
Because, right, we have to file the tax returns on behalf of the HOAs every year, and, keep a full books that's updated every single month, right? Balance sheet, account payable, receivable, income statement, cash flow statement, all these things have to be updated and shared with them on a monthly basis. And it has to be kept good enough so that the accountant at the end of the year doesn't have to spend so much time reviewing and auditing, which is going to drive up the cost for the HOA on just the, professional review.
Yeah.
right? So you're doing a lot of different things based on who you're doing the reporting for.
Yeah.
But so far it's working.
So far it's working. I think as long as you have like the proper systems in place, I think it could go very smoothly. But like you mentioned, all the different like accounting and reporting that we do, because we do like third-party clients, we send out the management invoices and distributions to them on the 15th that we collect in the escrow account.
Yeah.
And then at the end of the month, we send out a report for any, internal investors, and those distributions, as well as the, um, HOA financials. So, we have something going on in the middle of the month. We have something going on at the end of the month. We have something going on in the beginning of the month. And then in between, there's hundreds and hundreds of bills that are due.
Yeah.
That need to be tracked, need to be charged accordingly. Owner contributions are due. Ensuring that the properties have enough funds for the mortgage, so nothing happens in that sense.
Yeah.
And then even ensuring that all of the like hat payments are received and recorded. If not, that throws off our management calculations.
Yeah.
And like a couple $100 every single property every single month adds up.
Yeah. Yeah, that's a lot of them. I mean, as fun as it is for us to talk about this, all the people at home are probably asleep or turned us off by now. So we could switch to something more interesting, such as what we're trying to do in 2026, which is the formation of a fund.
Yes.
Because right now, every deal that we do, we first put the property under contract, and then typically we only have generally around 60 days from the time the contract is signed to the time of closing. And within that time period, we need to line up investors to help pay for the down payment, right? Because we get a first position lien from a bank, and that's generally going to be anywhere from 70 to 80% of the purchase price. And then oftentimes we look to, collect the balance from investors, or at least some portion of that from investors. But right now, operating in that way, it's worked so far, right? And we've been able to close on every deal that we've went after, operating in that manner. But it's very stressful, and it limits the size of the deals that you're willing to go after, because you're not sure how much you're going to be able to raise, for that deal. So we kind of have a mental cap as to what kind of deals we go after. And we also had to be very cognizant of the terms, like how fast we say we're going to close on the deal, because we want to make sure we give ourselves enough time to raise that money. So the main reason for the fund, which is just we'd be collecting money from investors up front, giving out projected returns, explaining the type of deals that we're going to be investing in, and then have those funds readily available to invest in opportunities as they come up.
Yeah.
Right. So, I mean, there's a lot of learning that goes into that. And also, it's kind of, I think, but it's good that we operated the way we did at first, because now we have a track record, at least, that we could show these people.
Yeah, not only a track record, we have all the systems in place. We know how to allocate funds to specific, properties, based on any individual owners or investors, percentage in the deal, whether that be, starting at X and ending at X after, their initial is returned. But the biggest thing that I like about the fund is like you said, we don't have to do this on a deal by deal basis and have to think or worry about so many different investors with multiple different percentage in equity in any given property. So in that sense, like, it just gets tricky because nothing is like streamlined. Every single property is different with the owner, the percent owned, how much needs to be returned to any given person based on like the deal that was structured with them. So it's like very deal by deal basis, and it's working fine. But just take the number now and double it and triple it, and then like it gets like very, very, very difficult to keep track with everything. But having the fund in place where we're not raising money for any specific property, that's up to like our discretion. But we raise money, and we go into whatever property. And then the only number we have to worry about, we could buy 10 properties. The only number that we need to worry about is the percentage of the investor's equity in the fund. That's it.
Yeah.
It doesn't matter on a property by property basis.
And in my opinion, it'll be much better for the investors because, they might be on the one deal that didn't perform the way it was projected to. You know what I mean?
Exactly.
So
Yeah.
if they could average across 5 to 10 properties, they're much more likely to get the anticipated return
Yeah.
than if they went just on one. Because one significant capital expenditure that was unexpected could, significantly change the return profile of a deal.
Yeah.
So I think that's one of the main selling points to the investors, and something we're going to have to, really communicate to them when we go on the road trying to raise money for that. But there's a lot of things to be confirmed by us. I mean, the initial dollar amount, how much we want to raise, what kind of liquidity provisions we want to offer to these people, right? How long is their money locked up? Does it get, do they have the ability to call back capital a certain percentage year by year by year? Right. So are we going to tie them to specific capital events, whether that be a sale or refinances of the properties? Whatever it is, it just has to be uniform across everybody.
Yes.
And I think it would be awesome to, if possible, raise all the money up front, so everybody's investment horizon begins on the same date, rather than people come in later or after. You know what I mean? So we'll see.
I think that that's definitely the best way to do it, and it'll be like on a fund by fund basis. It'll be like Fund A. We start on whatever date, we raise X amount of dollars, and whoever is invested in that fund is locked into that fund. And then, we buy the properties, we manage the properties, and then maybe even after 5-7 years, after we've raised rents to what we want to raise them to, the properties are all stabilized, maybe we look for a sale, and then we close that fund. So something like that is also an idea of mine.
And what do you think the target properties at where, Viza's point, current size, deal history, where do you think Viza should be looking for? What kind of properties, what areas, and why?
Right now, I'd say anything over like 12 to 15 units. I think it's like a perfect property size. It's not difficult to manage. And I think the best part about it is that
you probably don't need a live-in super.
You don't need a super at that size. Most of the time, like we saw with Woodland, there is 1 or 2 people there who like really care about the property and are willing to help out. When there's so many people, because everyone's like friendly. You have so many people living in a big house together. You're bound to become friendly with them. But I think that's the perfect size. So repairs in one unit or a vacancy in another unit, it doesn't affect the property as much as a single or 2 family would.
Yes.
Because you can only have rents at a certain price. But for a single family, for example, if something goes wrong, like something relatively major goes wrong, that could cut into 2-3 months of cash flows. Maybe even more, depending on, whatever, if it's a roof repair, something like that could really cut into cash flows. So
spreading out a roof repair over 2 units versus 12 units, a totally different story.
Exactly. Yeah. You have that cushion, you have that cash flow for the repairs, and that's priced into to those properties.
And one thing I like as well is throwing any commercial on the ground floor, making it into a mixed-use building, just because that carves out a lot of our competition, right? A lot of our competition are people who invest exclusively into multifamily properties because they don't like commercial, and also you get the best financing rates for exclusively multifamily. So anytime you throw any bit of commercial in, it takes out a lot of the people you're up against and trying to win these deals. The financing is not as advantageous, but typically you're going in at a little bit higher yield, where it makes sense. You know what I mean? And I think that over time, it's good to keep getting the experience we're getting with the commercial, because not only are we understanding how to operate with commercial, but we're understanding what makes a good commercial site. So like next time around, maybe one day we want to buy a building that's exclusively commercial. You know what I mean? We'll know from having leased out these spaces and spoken to our commercial tenants what it is that they're looking for, so that we can make much more intelligent buy-side decisions, when that opportunity comes along.
Yeah, definitely.
Because But especially like in certain areas where we invest, you got to be very careful and very strategic about what commercial buildings you buy.
Yeah.
Because there's not nearly as much foot traffic, car traffic as there is in North Jersey. Like in North Jersey, we just stuck a sign out on a commercial building in Booton, and I mean we're getting like at least 2 inquiries per week, like serious inquiries.
Yeah.
Whereas in another town in South Jersey, we had a commercial space available for 2 years that we
Yeah.
couldn't have rented. You know what I
Yeah.
mean? So
Oh, definitely everything depends on the location for that.
yeah,
'Cause you gotta think like
like them.
yeah, exactly. Or even like the idea that we had with putting the Visa brokerage down there. Nobody would really see it, you know?
Yeah.
So if we wouldn't even do that, what would make like somebody who needs customers, attracted to that spot?
Yeah.
So that's a huge thing to consider before investing in or getting involved in any sort of commercial space.
Yeah. That's the thing, because we were thinking, what can we open that's going to work here, even if it's
Exactly.
low risk?
Yeah.
And we couldn't really come up with anything that we were comfortable with going forward on. So it's like, if that's us and that's how we feel about our own property, then why wouldn't other people feel that way, coming in paying market rent
Exactly.
or what we're trying to get for the space? So
Exactly. Yeah.
it definitely teaches you a lot, and you can't just take for granted, oh, it's only X amount of commercial square footage. We'll find somebody. There'll be somebody for this. Like, yeah,
Yeah.
there might not be. Yeah.
Yeah.
If there's no foot or car traffic, no visibility, no whatever it is that these people are looking for. Sometimes they want specific ceiling heights. They want significant glass windows with a lot of visibility in from the street, parking.
Yeah.
A lot of businesses require parking for their tenants or the people that work there. So I think it's been awesome finally getting some of that experience, because I think, long term, if you're buying buildings that are exclusively commercial, then you have even a lot less competition, because there's not a lot of people, in my opinion, that are doing that.
Yeah. I agree. Also, what comes with commercial and like what we saw um, in North Jersey, in Linden, it's difficult to have mixed use with residents upstairs, potentially kids, and with like somebody who's trying to run and operate a business downstairs. It gets very tricky, and there's oftentimes like conflicts. That's like exactly what we saw at Linden.
Yeah. It could be vice versa too. The residents,
Definitely. Yeah.
tenants move in. It was one use when they moved in, and then that person moves out, and now it's another use.
Yeah.
And they're like, I never wanted to live above a daycare or whatever it could be. You know what I mean?
Exactly. Yeah.
So, I mean, that's just the risk that they take when they move into a mixed-use building. But, even when they leave, okay, you're going to have to find someone else who's willing to live above whatever is in there at the moment. You know what I mean?
Yeah. Yeah. No, definitely.
Yeah. And even with the commercial spaces, sometimes you got to be careful, because certain uses carry a lot more risk from an insurance standpoint and could significantly drive up your insurance premium when they find out what kind of use is there.
Yeah. No,
I mean,
all of this is like really good, because it's like all the things that I feel like not a lot of people think about when they think about just investing in real estate. There's so many little details that goes from the second you find a deal to managing it and getting tenants, and just everything that's unspoken of from a glance of investing in real estate.
Yeah.
Everything like you just mentioned.
People just take it for granted. It seems very simple, and I mean it is. It's just work, right? But with the commercial tenants, also, it's more of a business deal, right? There's a lot more negotiation that goes into it, because oftentimes the commercial tenant has a lot more bargaining power than a residential tenant, right?
Yeah.
Residential tenant, like, you're gonna find someone to lease the apartment as long as it's reasonably priced. You're not really going to negotiate the terms of your lease. It is what it is. There are standard things that the tenant pays for, and then that the owner pays for in New Jersey generally, and we kind of go by that. But commercial, it could be anything, right? Based on, they could be paying taxes, insurance, all maintenance, even associated with the outside for their business as part of the lease. There may be multiple months of no rent. We may even contribute partially toward the build out of whatever they're trying to put there.
Yeah.
Right? So there's a lot that goes into it. And then on top of it, even if it's an approved use, there's still a CO process that has to be followed to make sure you're in compliance with the town. They have to get like registered with the town as far as like their business license and all of that. So it's like really like a partnership. I mean, they're the ones taking the risk, putting up most of the money, opening a business.
Of course.
But there's a lot that's required on both sides for it to happen. Yeah.
Yeah.
But okay, those are the kind of properties that we're going after as far as acquisitions. that's good to know. But we're also trying to get as much HOA business as we can.
Yeah.
Right. I mean, because we've learned a lot in the last couple years and are trying to, take on as much as we can right in our backyard.
Yeah.
Jersey City, Hoboken area. It's probably like the capital of HOAs in New Jersey, that's for sure.
Definitely.
But it's not just there. There's also towns like Hackensack that has a lot of HOA inventory.
Hackensack, yeah, definitely. You have like Jersey City,
Mm-hmm.
pretty anywhere down here on the water, stemming from like Fort Lee all the way down to it's like Bayonne.
Yeah.
Yeah.
But it just really comes down to, because that is straight service, right?
Yeah.
What makes our service better than the competition? Because there's plenty of people who are in the HOA management business that are doing it. I mean, obviously communication, I think we take that very seriously. I don't think anybody ever goes more than 24 hours before receiving an answer, as to what's going on or whatever. Even if it's not immediate answer, like we tell them, hey, this is the situation, and we'll get back to you with an update whenever we do get that resolved, whatever it is.
Yeah.
But
one of the other biggest things that we've seen from the HOAs that we currently manage during their transition, most of them have spoken about bills being unpaid, incorrect financials, not being transparent with financials. So all of those items are which makes our onboarding process sometimes a little bit tricky, trying to, get every single bill switched over into, our name. So we're taking care of it. And we've even seen with one of the HOAs down here in Hoboken where we couldn't even get into like a PSC&G portal because even the previous management company wasn't paying the PSC&G bill.
Yeah.
So that's one of the biggest things that a lot of board members say to us, that, bills are going unpaid.
Yeah.
Even a lot of the residential owners that we've took over management within the last couple months, a big selling point was financials and bill paying and all of that like streamlined service that we now have like all these processes in place with automatic reports going out, Buildium and the tracking of every single transaction, so nothing's really ever missed.
Yeah. And we have fail-safe in place now because we have people, an accountant who's going to be reviewing these for us whenever we come into any specific questions, right? Because we have accounting finance background, but we're not specific CPA.
Yeah.
So a lot of times things come up and we need a second set of eyes, expert eyes on it. And we do have that to offer to our clients and also to double check our work, which has been great.
Exactly. Especially for the initial transition and moving everything from one management company's books onto ours, that transition and making sure the balance sheet and everything is correct and proper. So we're off to a perfect start, and then it's just smooth from there.
Yeah.
The transition is important.
Yep. And we could definitely sometimes accept failure. Because I think maybe other management companies, part of their downfall, the reason why they lose their clients is they don't take responsibility when they make mistakes.
Yeah.
And, perfect example, we were trying to do a super basic tire repair outside of a building. And first contractor we hired to do it, he didn't show up.
Yeah.
And, we looked obviously poorly when that happened. And so then I was like, you know what? I got to get this done ASAP. Fired that contractor, hired another one, and I pushed him like hell to get it done that week. I shouldn't have done that because he had to use somebody he didn't typically use to get the job done.
Yeah.
And that job was done really poorly. So now the first person I sent, no show. The second person I sent did a poor job.
Yeah.
But I took it, on the chin. I was like, listen, I tried to get this done very cheaply. Maybe I hired the person I shouldn't have. And that is how we ended up in the situation we're in. But we were able to get it resolved. Finally, we were able to make that fix. And the vendor was able to do it at no cost.
Yeah.
So at least we saved the money there. But we did say, like, listen, this was our fault. It never should have happened. But at least we got it resolved now. And if you want to do a larger, more permanent repair in the near future, we can talk about that. But, there's no reason not to take responsibility for things that go wrong because ultimately we are the most responsible. We're the one making decisions, hiring people, and the people that have to answer to them at the end of the day. You can't blame the vendor because you are the main representation.
Yeah. Well, it's also the communication, like you said before. You could have not communicated that to the board or, any of the owners at that condo building, and you could have just like tried to deal with it yourself, left them in the dark. All they would have seen was nobody showing up the first day,
Mm.
a poorly done job the next day, and then, somebody coming back a couple of days later and redoing it.
Mhm.
But communicating that whole process to them so they're aware and they know what's going on is, I think, more important
Mhm.
than what actually happened.
Yeah.
Because at the end of the day, also, we were managing and getting the contractors who are coming,
Mhm.
but it was out of our hands that there was an emergency with the first
Mhm.
contractor. That was out of our hands, unfortunately, and we did what we had to do very last second to send somebody else there right away.
Mhm.
So,
Yeah. And these mistakes are gonna happen no matter what.
happen.
There's too many times where, something's gonna happen, personal issues, whatever it could be.
Exactly. Yeah.
So, anybody could be, it's easy when everything's going well, but it's just like, how do you react when everything's going the wrong way? Yeah.
Exactly. Yeah. And the volume that we're doing now with 300 plus units and so many different owners
Mhm.
and investors that we're working with, you know, some little things are bound to slip through the cracks,
Mhm.
but I think it's about how we manage them and just ensuring that as little as possible slips through the
Yeah.
cracks.
Yeah. And I feel really good with the current team structure and how we're operating that that's
Yeah.
gonna happen, very infrequently.
Yeah.
I think we're gonna be able to grow pretty substantially, at the current team size with the systems that we have in place. Thank you everybody for tuning in today. If you have any questions about real estate, property management, investments, please feel free to reach out to us.